Good afternoon and welcome to the Prince George's Community Federal Credit Union 2017 Lunch and Learn Series. Today's presentation is brought to you in partnership with Coffee, a nationwide financial coaching and education center focusing on improving the financial health of individuals. As the premier credit union of Prince George's County, they have joined with Coffee to expand their mission of providing quality financial education to their community and lending insight into credit management, home ownership, and money management. Prince George's Community Federal Credit Union is a full-service financial institution serving anyone who lives, works, or worships in Prince George's County, Maryland. This year they are celebrating 50 years in business and are one of the county's best-kept secrets with competitive loan and savings rates as well as discounts to national retailers. They currently serve over 16,000 members in the area and welcome you to come and experience the benefits of membership as well. Later on in the presentation, I will display their contact information and answer any specific questions you may have concerning your financial needs. Please note that today's webinar is live and all phone lines have been muted. If you have questions, please feel free to type it into the question field on the right-hand side of your menu bar. All questions are private and will be addressed at the end of our discussion. We will be offering a free 60-minute financial coaching session with the completion of 3 webinars. More information will be given at the end of today's presentation. Lastly, a recording of today's session will be available within 2 days. Details will be sent to your email following the presentation. And with that, I would like to introduce myself. My name is Charmaine Williams, and I will be your presenter today. This is a part 2 of a series, so hopefully you attended last month and will attend next month as well. So we're talking about credit today and rebuilding. We know that anytime a bank, finance company, or business lends you money and you agree to pay it back at a later date, that is credit. Your credit report shows your credit history in detail, all of your accounts, payment history, and any public records that you may have. A credit score is a 3-digit number that summarizes your risk and can change due to factors. And those factors, on most cases, depend on you and your behaviors. So this is just a general idea of how certain factors will affect your credit score. Now, these numbers are not exact, and it all depends on the algorithmic equation used or the credit model being used by the company. So in this case, the current FICO score of this individual is 780. So say they max out their credit card. It's going to drop anywhere from 735 to 755. If they're 30 days late on a mortgage, it could be anywhere from 670 to 690 it will drop to. If they settle credit card debt, from 655 to 675. If they happen to go into foreclosure, 620 to 640. And if they file for bankruptcy, that's the biggest drop of all, anywhere from 540 to 560. So again, this is not an exact, this is an idea of how these factors will affect your credit score. Now again, we're going to talk about the effects of negative credit. According to Equifax.com, credit scoring is as follows. Excellent is anywhere from 760 to 850. Very good, 725 to 759. Good from 660 to 724. Fair from 560 to 659. And anything below 559 is poor credit. Now this isn't the holy grail of credit scoring because every site that you check will vary. And as I stated earlier, your credit score is a 3-digit number that lenders use to assess your credit worthiness, so to speak. Now, as you can see by the chart on the screen, the higher the credit, the lower the interest rate. And the lower the score, the higher the interest rate. So you may ask, well, why charge me so much interest and make my payments so much higher if my credit score is lower? Well, because your score is lower, you are more of a risk to the lender, and they will charge you more interest in order to make back more of their money quickly. So with that being said, how much will you end up paying over the life of the loan? So let's say you buy a car for $23,000 and you have poor credit, a score of about 556. The dealer or the lender then charges you 18% interest for 72 months. you will end up paying over $14,700 in interest and a total of about $37,800 for that car. Now, if you got charged a more favorable interest rate because you are in what is known as the excellent credit range, and they charged you about 6% interest, you would only pay about $4,400 in interest for that vehicle for a total of about $27,400. So you see the big difference there. This is why it pays to maintain a good credit score. And then you could check out these types of calculators on the Prince George's Community Federal Credit Union's website. So now we're going to talk about your credit report. When you pull your credit report from annualcreditreport.com, you will only get your reporting and not the score. You can obtain your score from a number of different channels, but it's more likely that you will have to pay a fee for that. Now you want to remember that before you focus on what your score is, you're going to want to go over your credit report with a fine-tooth comb because the information on your report directly affects your score. Here are a few ways to obtain your credit score. Now, I know this is going to be a lot of information to take in today, and you don't have to take notes as the notes are provided for you on your menu bar. Now, this chart shows a few credit card companies that offer credit scores to their clients. All right. So as you can see, Barclays, Capital One, Citi, Discover, First Bank, US Bank, the Walmart credit card, they all offer scores. Now, the thing is, when you pull your score from here, you have to remember that the score you're getting from the credit card is more likely than not for one particular credit bureau. Now, like as you can see, Discover is TransUnion FICO, whereas with Citi, it's Equifax. So you get a general idea of where you're at, but then again, if you want all three accurately, you can always pay a fee and pull your score at myfico.com. So when you pull your credit report, you want to verify that all of the information is correct. You want to dispute any inaccurate items. You also want to make sure that all of your payments are on time. Make sure you keep your balances low. And if you have any issues, you'll need at least 30 to 60 days to fix mistakes or problems. Now, when you pull your report, again, there are 5 different areas that you have to look at. Your personal information, which obviously is your name, your address, previous address, your date of birth, your social security number, your current employer and previous employers, etc. All your personal information. Any information that you fill out when you are applying for credit, that's going to be there in that personal information section. Then you have all of your accounts or trade lines, as they like to call them. Any inquiries that you may have had when you apply for credit anywhere, that's another section that's going to be on there. Also, any public records. If you have any liens against you or you have back child support, any public records are going to be on there as well. And then there's also what is known as the credit scoring results and summary section. So if any of you have ever applied for credit and been denied for whatever reason, and you receive that letter in the mail, it gives you the reason why you were denied and a number next to it. So that would be the credit scoring results and summary section. So when you pull your report, you want to go over everything with a fine-tooth comb to make sure, again, that all information is accurate and correct. So once you pull your report and you see that there's some information on there that is negative, if damaged credit is keeping you from getting a loan or the credit that you feel you deserve, then obviously you want to take some steps to get that taken care of. You're going to want to give yourself enough time to repair the damage and rebuild your credit. So there are 4 steps to take in order to do this. Step 1, fix the mistakes. It's not unusual to find wrong or outdated accounts, so you may want to check for the following items: accounts that don't belong to you, incorrect balances, duplicate accounts, or old accounts. If you find items on your report that are inaccurate or do not belong to you, you're going to definitely want to dispute those items. So you could check out sites like ftc.gov for sample dispute letters. You want to contact the credit reporting agency listing the incorrect information, the credit grantor that is reporting it, or both. And then you want to go to the credit bureaus first. But you'll have to check with all three bureaus and dispute the mistake through each one that has the wrong information. Because once you dispute it with one credit bureau, they're not going to contact the other two for you. That's what you are going to have to do. You want to put your dispute in writing, describing the problem, including your documentation to support your dispute. The credit bureau or the credit grantor will generally get back to you within 30 days of filing that dispute. Now, ways to file. You can dispute your items online directly at the credit bureau's site. As you can see here, it says in 3 easy steps you can get started. And you could also come back in and check the status of your dispute. You can also dispute your items via snail mail or regular mail. But when you do that, you have to make sure that you get a certified return receipt when you're mailing these documents. This way, someone at the credit bureau agency has to sign for it, and then you'll get that information back, who signed for it, the date they received it, etc. That way, if you don't hear from them within that 30-day period, you can contact them and be like, okay, well, I haven't heard from you. I'm disputing XYZ account. This is the information. Why haven't you contacted me back in 30 days? If they say they didn't receive the letter, you can always be like, well, yes, so-and-so signed for it on such and such a day. I know that it made it to you. So this is why you want to send everything, if you're going to mail it, certified return receipt. Step 2 would be to let time heal the wounds. Now remember, as negative information becomes older, it becomes less important on your credit file. Now, it will still have an impact on your credit worthiness, but that impact becomes less over time, but only if you now pay your bills, etc., on time. Because if you attended last month's webinar, you'll know that 35% of what makes up your credit score is payment history. So you want to make sure that you're continuing to pay your bills on time, at least while you're getting all the inaccurate and negative information taken care of. Step 3 would be to ask your creditors for help. Now, sometimes negative information is accurate, but due to unusual circumstances, say loss of income, a medical emergency, divorce, etc., you can fall behind. So if you've had a good payment history but fell behind due to extenuating circumstances, and you are now back on your feet and paying your bills on time, you may want to ask your creditors to re-age your accounts or essentially delete those previously late payments. So this is a good idea as well. So again, life happens. Like I said, your things can change due to certain factors. Sometimes it has nothing to do with you personally, but something happens along the way. You want to call your creditors and ask them, hey, this is what happened. Explain the situation. Let them know that you're back on track. You're paying your bills again. Would it be possible to please re-age my accounts so that way it shows, hey, you've had steady on-time payment history, help show good on your report and help boost your score. And then step 4. Step 4 would be to build positive new credit references. The best thing you can do to rebuild your credit is use credit carefully and always pay your bills on time. So consumers who are proactive about rebuilding their credit after problems have occurred can see significant improvement in as little as a year or 2, sometimes less, depending. So here are a few tips. Lenders will want to see at least a couple of recent credit accounts paid on time. So if you still have open accounts, use them periodically for things that you would buy anyway, then make sure to pay the bill well before the due date. Remember that carrying balances and paying interest is not necessary for rebuilding good credit. If you don't currently have any credit cards, it may be a good idea to get one. You want to avoid guaranteed approval credit cards that cost a couple $100s in fees. A better bet is a legitimate secured card where you place a security deposit with the lender in exchange for a major credit card with a modest credit limit. Okay, we'll talk about that more a little bit later. And then remember to never pay a bill late. Payment history is a big thing. So always, 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 I can't stress it enough, to pay your bills on time. So now I'm going to talk about secured credit cards. Now, if you were to go to a site like myfico.com, you would see that they discuss in detail how secured cards can help you to establish or reestablish good credit. So basically, a secured card is a credit card that has a credit limit secured by a deposit that you make into a special savings account. Your available limit is based on how large of a deposit that you make. It could be anywhere from 300 up to 2,000. Some may even be higher. But you would have to find out from the lender, because if you can have a higher limit, then I would hope that you're paying your other bills as well. You're trying to reestablish credit, yes, but if you have $2,000 to drop on a secured card, I would hope that you've been getting caught up on the other bills as well. So the money that you deposit into your savings account for your credit limit is there just in case you happen to default on your payments. Now just remember that you still have to make your payments every month when you use this card. It's a credit card, yes, that still has to be paid off. Yes, they have your security deposit placed in an account, but it doesn't mean that you don't have to pay it every month. Now, if you're looking for a secured card, the first place you would want to start is your bank. Also ask them if they report to all 3 credit bureaus. And as I said before, you can check online for different sites, myFICO, creditcards.com, or even nerdwallet.com to see who else other than your bank or lender that offers secured credit cards. Okay, so after secured cards, we have credit builder loans. Now, a credit builder loan is a small loan made by most credit unions and some banks in order to help you build credit. You can check with your local credit union, obviously, to ask if they offer these services. In most cases, you need to have an account with them, obviously for a certain amount of time with no overdrafts, etc. Now, not all credit builder loans are the same. In some cases, it's not an actual loan where you get the money. They hold it for you in a secured account. Once you pay for the year, the 12 months is usually what the terms are. Once you pay that off, they will offer you an unsecured credit card for the amount that you received the loan for. So this is something that you have to ask them to figure out what their terms are. Now, it could be anywhere from I think 300 all the way up to 2,000 depending on the institution. In other cases, you would get the money from the bank, and again, you would make the monthly payments until paid off. So you're going to want to find out what it is that they do specifically. Okay, this is also a great way to build or rebuild by showing on-time monthly payments and a mix of credit if you happen to have a credit card or a stored card already, because that's another percentage of what makes up your credit score, is having a healthy mix of credit. So from installment loans to revolving to personal loans. So these are the things that help build up your score as well. I'm going to get into your credit responsibilities. Obviously, you only want to borrow what you can repay. You don't want to overextend yourself. Credit isn't something that you get just so that you can go shopping or use and be like, hey, you know what, I don't have to pay it right now. Always think of credit as, if you're shopping or using it for something, that money that you haven't made as of yet by working that you're going to have to use in the future to pay this off. Okay, you're basically borrowing, agreeing to pay back with interest and in some cases extra fees. So borrow only what you can repay, and again, use it wisely. You always want to read and understand your credit card contract. Now, for those who don't have any credit cards and are looking to build or reestablish, you want to pay attention to those credit card contracts that you're getting. Some offer 0% APR for the first 6 months or 12 months. Okay, that's great. But after that introductory period is over, what is the percentage rate jumping to? Is it 27%, 29%? In some cases, I've seen credit cards with as high as like 33% interest rate. That's not what you want. All right, so those are the things that you want to look at and understand properly. You, again, always want to pay your debts promptly, on time. On time is on or before the due date, okay? Always pay it on time. If you cannot make your payments for some reason, notify your creditors. Call them. They're more willing to work with you if you contact them before they have to contact you for a missed payment. I mean, they're still willing to work with you, but again, if you know you can't make it, give them a call. All right? Avoid buying on impulse. Again, credit cards, that's not your money as of yet. You're borrowing it and agreeing to pay it back. If you lose your card or have it stolen, report them promptly as soon as you realize it's missing. Okay? You don't want to be held liable for the money that was spent on those cards. And then never give your credit card number over the phone unless you initiate the call or are absolutely certain of the identity of the caller. There are a lot of identity thieves out there right now. Most of them don't even call you, but still, in some cases, they may pick up the phone and say, hey, we're with so-and-so credit card company. We believe your account has been hacked. Did you make a purchase? You're going to say, no, all we need from you is the last 4 digits of your social security number. What's your credit card number? They'll ask you questions like that. And once you give them that information, they take it and they go with it, and then they run up your credit card. So those are things that you want to be careful about. You always want to make sure that you're paying attention what it is you're doing. You want to check your account balances. You want to check your credit card statements to make sure that the purchases on there are yours. Because if you're not paying attention, you have higher balances, and someone does get a hold of your credit card, you may, again, be liable for those purchases. And if you're already making the minimum payments every month, that's going to negatively affect your credit in the long run because it's going to be harder for you to pay off. So again, take these things into consideration. First and foremost, pull your credit report from annualcreditreport.com. You're entitled to a free report every year from each one of the credit bureaus, Experian, TransUnion, and Equifax. And you want to go over that report with a fine-tooth comb, right? Focus on clearing up the negatives and the inaccurate information on your credit report before you focus on what your score is. Because again, those items on that report are what help make up your credit score. Okay? So now I'm going to open up for any questions that you may have. If there's something that you wanted to hear about that perhaps we didn't cover, please let me know and we'll answer the questions now because I know probably most people are on their lunch and want to get back to work. So do I have any questions? Okay, it doesn't seem that there are any questions. Well, if there are no questions, again, I'd like to thank you all for attending. So thank you for attending today's educational webinar. To learn more, oh, hold on, question. Oh, thank you very much. It was a compliment, not a question, but thank you very much. I'm glad that you enjoyed it. I hope that you received information that will be helpful to you on your path to rebuilding and repairing credit if that's what's needed. So again, to learn more about Prince George's Community Federal Credit Union or to speak to a member service representative, please visit www.princegeorgescfcu.org or call 800-952-7428. You can also call 301-627-2666. I would like to thank you again for attending today. We hope that you found it very informative. And to schedule your free 60-minute financial coaching session, please call Coffee at 866-459-5165. So thank you again. Please remember that the notes and handouts are on your menu bar on the right-hand side of the screen.